Good afternoon. This is the market update for Thursday, June 6th. And we're starting off today with the Dow 15-minute charts. And you recall I sent out that midday alert yesterday about us being ultra conservative and cautious with the market. Well, today, you can see looking at the 15-minute chart, really a lot of chop in the session. Especially early on, we were up a little bit, but just trading back and forth and not a whole lot of oomph, and things looked pretty dead. And then the floor fell out of the market and down we went. Down 120 plus points at one stage, and the rumor started floating around that the reason for the tank was a possible fund blow up. They were short on the dollar-yen carry trade, and that was the reason for the big sell-off. And I had remarked in chat, and we actually had Snowman come out and give us a fantastic way to play the bounce that we expected in the market going into tomorrow's jobs report. Now, every time we have heard over the last few years that some sort of fund has blown up and the market has sold off, usually what has happened is the other Wall Street banks know what's going on, trigger the short trade, trigger the covering or the sell-off, buy it, and then jam the market back up. And today looks to be no different. Almost a 196 point bounce from the lows. And you can see we are just now back into this bearish or bullish falling wedge that we fell out of yesterday. And it's got an upside range of about 200 points. We've got the jobs report tomorrow. Going to be pretty key for the market. You recall we've been getting all this absolute nonsense, and I call it nonsense because I believe it is, that the Fed is going to be done in the next couple of months. They're going to start winding up QE infinity. They're going to slow it down. Absolute nonsense, in my opinion. The Fed, Bernanke has stated many, many times that they want unemployment better and they want the economy better. The analogy I gave on the weekend video is we're driving up an extremely steep hill. We're about halfway up that hill. Actually, halfway is an exaggeration. We're probably a third of the way up that hill. Are you going to take your foot off the pedal a third of the way up the hill and hope that you're going to make it all the way up to the top and over the top? Of course not. It's stupid thinking. And we have the business media out there pumping out these nonsense articles, and we also have these two bearish Fed governors who are non-voting members anyway, coming out and saying, yeah, we should pull back. And it gets extra headlines because Wall Street wants a dip in the market so that they can rush in and buy. That's the game that's on right now. And today, when we got that news of the supposed liquidation in a fund, that was the clue that we are about ready to reverse nicely to the upside. Now, we might be a little bit overbought on the 15-minute chart. Again, it's all going to depend on the jobs report tomorrow. I also mentioned in the chat room this morning when we were at the lows that when we've had a little bit of a sell-off, and granted, the 2-3 day sell-off we've had in the market is considered a big sell-off this year, that typically we see bottoming action on the jobs report. It's happened so many times over the last few years. Whether or not the jobs report is good, bad, or indifferent, we usually tend to bottom around that time. The number tomorrow, if we get a bad number, the Fed is not done, headlines will, scroll all over the place. If it's whatever, anemic, same thing. If it's a big jobs report number, yeah, we could see a pullback on it. But, if you look into the jobless claims in the last couple of employment reports that we've seen, the kind of jobs that the economy is creating right now are crappy service jobs, not the high-paying manufacturing jobs. And, the Fed is far from done, and that's essentially, I'm going to stick to that point, and, you'll see the rest of the market come around to that eventually. But a chart I wanted to bring up, you've heard me talk about in the last, really over the last month, about how this rally is a lot like the 1995 rally. 1995 rally was a hated rally, just like this rally is here. No one believed it. Everyone expected it to sell off. And if you look here, over the course of the year, ended up putting in a 34% rally. And at this stage of the rally, this is where we are on the chart. And you can see it actually kind of mirrored what happened back in 1997. We had a 5% retrace in the middle of May, bounce back, then another little bit of a sell-off, and then June started to move back up, summer doldrums, typical sell-off into September, and then this is about the time where people said, crap, this market's never going to pull back, and we had a huge upside move going into year-end. Market this year almost identical. Here is a 6-month chart of the Dow. Up we go, consolidation, up we go, same sort of thing. And we've got everyone hating this rally, everyone expecting a big pullback, and each and every dip gets bought because everyone wants to get in, but they don't want to admit that they are getting in. Today's chart, looking at the daily chart, we've got this extreme negative MACD, and you've heard me talk about this before. This happens before reversals, and we've got stochastics down at the 20 level. We also got a hammer and a bounce. We broke through the 50-day moving average, rebounded, and closed above it and put this handle in. This is about as good as a near-term bottom signal as you usually get on charts. 9 out of 10 times, it'll work to the upside. One other thing we were talking about today at the market bottom in the chat room was the put-call ratio. And you can see here, essentially it measures puts and calls in the market. And when the number's above 1, it means there's more puts than calls, and below 1 means more calls than puts. When we have gotten above the 115 level, over the last few months, we've seen a nice bounce back in the market. It tends to indicate that the market is bound to bounce. And sure enough, today, we were up there above 115, and we got that big 200-point reversal on the Dow. Dow Transports. Now, I've drawn the line in here. We bounced a little bit early here. We broke that previous trend line that was in place. Support is 6,050, but it doesn't look like we're going to get to that level unless it's a really good jobs number tomorrow. Again, extreme negative MACD, one of the most negative we've had this year. And each extreme negative MACD that we've seen, just like on the Dow, has resulted in a big bounce back in the market over the next few days. And we've got stochastics in the basement as well. So all systems go, at least with regards to the charts. And a lot of shorts got sucked in yet again. What is this? The 512th time this year that they got trapped. And probably thrown in the towel and going, God damn Fed, look, they did it to me again. Russell. Now, I wanted to point something out here on the Russell small cap chart. This one has been mirroring the action we saw in the Dow Transports, as you've noted in the previous videos, but unlike the other indices, the Russell has actually held up pretty well and didn't even test its 50-day moving average. And the way I look at that is, if the economy does actually start to pick up, as I've said before, the small cap stocks are the ones that will outperform. They'll outperform the large cap stocks because small cap stocks are U.S. economic based. The recovery in the U.S. benefits the small cap stocks because it's focused on those stocks more. Quick mention on the TBT. You'll remember last week the sky was falling. Treasuries are going in the tank, and you can see here from the TBT that has started to reverse course, and that is essentially what it is. When you see the business media headlines telling you one thing, it means they're doing the opposite. You are behind the curve. But anyway, we've got some very nice setups going into next week. We had a couple of nice little plays. HEB, well, look at that, hit 29 cents today. Almost a 33% move for us over the last couple of days. Big reversal on this one. The SARS flu stocks got a bit of a pullback today. We did jump into a new one, IBIO. The candle actually looked a hell of a lot better than this, except for that crap-ola paint at the close. I don't know how they were able to close this one at 40 cents when it was 42.43, but there you go. This is probably why. AMEXE, but I should actually put an SC in front of the word, and that would be why they were able to do that. 45 cents is the breakout on this one, and these guys should be way higher. NVAX has been getting a lot of play on this, but iBio, I think, is going to have a very nice niche. They're going to be used, and if the story picks up, all these stocks will move. We had a very nice trade on APP today. We got a symmetrical triangle breakout at this one, 203, 205 today. I had said in chat if we got that break, we would see it move to 212 plus, closed at 213. Doesn't get any better than that. Follow through on this one tomorrow, 220, and we could be looking at a test of the previous highs at 240. Very nice volume pop today on this one. Positive MACD cross. Chart looks really, really good on this one. The optical stocks were also very, very active today, and of course, Zone is a profitable one. Breakout is 94.95 cents. We actually got a decent close on this one. When the market sold off, we got a little bit of a dip on it, but not unexpected in the market the way everyone's been pretty skittish. What I said in the midday video yesterday still stands. Trade to your comfort level in this market, and as I've continued to say, is one of the positives has been we're not on a whole lot of swing plays. We're playing the intraday momentum, and that's good when the market's trying to decide what it's going to do. But I go back to my thinking that this is exactly like 1995, guys, and we're just going to ride this train as long as it keeps going. So that's it for the video tonight. If you've got any questions, shoot me an email. Let's see what the jobs report gives us tomorrow, what spins out of there. But it looks like the big boys used this morning to load up against it, so the bias is to the upside, and next week could end up being a very, very nice week again. So have a great evening, afternoon, and see you guys tomorrow. Bye.